Good morning, everybody. It is February 9th, and guess what? For those of you that I know what this is, it is the plan of attack. For those of you who don't know what this is, plan of attack is basically my plan and how I look to trade zero DTE options for the day. So I like to come in and look at the ES and formulate my plan as far as how I am looking at the moment, because the moment does change, or the situation changes as the day unfolds, but it's good to come in for a plan. And for those of you that do know what this is, I wonder why I stopped and whatnot. To be quite honest, I didn't. I stopped doing it because it turned into it was hard to do with my kids. But now both my kids are in school, so I have a little bit more time to do it. And, and then after that, and I know we're here in February. As far as like why I kind of stopped it, to be quite honest, I am not 100% sure. Life gets busy, then next thing you know, things get put on the back burner, and you kind of just forget things change really. I mean, if those of you living life know what I mean, like sometimes things change and you just have to roll with the punches. But nonetheless, so I did have to sit down and ask, what do I want to do for 2024? And as I've been working with them, I was like, oh, what do I really want to do? And I really want to finesse my zero DTE trading. That's where I really think I have an edge. It's my style of trading. I enjoy day trades, and I also enjoy using options, or the power of options, to make consistent or placing high probability trades, and thus they are consistent, all by using technical analysis and using spreads the correct way and things like that. But that's me, and this is my plan for trading plan tech. So I would look, or I'm going to attempt to keep this moving. If I happen to fade and for whatever reason stop doing it, comment on this video or something like, hey Cody, where are those plan of attack videos at, if this is something you're interested in. But let's go ahead and get it started. Sorry if you hear weird crunching. I just found out my cord was like rubbing against itself. Okay. But all right. So let's get it going. All right. So right now the ES is up currently 0.16% on the day. So I'll call that relatively flat. But believe it or not, we're still moving. Oh, point of control just jumped up to up here as well. All right. So before we get started, the first thing I always do for plan of attack is I need to know, is there news, economic data that's going to be in my way today? And at the moment, there is not, actually. February 9th, and this is at forexfactory.com. And you can see that there is the Canadians unemployment rate change and whatnot. I don't anticipate that being too much of a mover in the US, but we'll have to see. But that happens in actually happens in roughly, what, 7 minutes? So we'll see if that moves anything, and then after an hour that should be settled, and then it looks like it's free range just based on technicals. All right, so as far as what do I do, like where do I feel I get my edge in zero DTE trading, is basically first I look at big picture and I narrow down to little picture. So here is big picture, here's the ES daily. So there's a few things I do want to point out, and I'm really just going to zoom in here on the last couple of days. We've obviously been rallying. The market's full on bull mode right now, making new all-time highs. That is great. But let's go ahead and see how we can plan it today. So after this wide range expansion candle up here, closed at the highs, and yesterday we closed almost on a doji or spinning top, whatever you want to call it. But what I did do, and you could do the same on your charts, is I did go ahead and draw a line at yesterday's low, and I have a line at yesterday's high. Now, why is that important? Because this candle right here can be a signal of a reversal candle at extension. So it is extended, right? We can agree all that the market is higher, but the path of least resistance is to the upside at the moment. Like, there's no denying that. So it makes today's plan of attack relatively easy. So if we do stay above these lines, then I think the bullish play then you just play a bullish play. If we do start to break below, then I think looking for a bearish play would be the way to go. All simply because this could be a potential reversal candle, and say it does break below, and I'll show you my other charts here in a minute, but say it does break below, like what right now it looks great, but what's to say at the open or a few minutes after the open we get just a big wick, and then it turns into a candle like this. And if we break this low, that is a technical pattern, at least to cause a pullback, right? So right now it does look great, but if we start to break that low, look for the bearish setup. And that's all basing it off of the daily time frame and the candlestick formation that occurred yesterday. And that's how we'll get our edge. All right, so we'll zoom in here. I have my 30-minute chart on the left. I have my 5-minute chart on the right. This is my version of quick hit, sandbox, whatever you want to call it. Basically, all in a nutshell, all this is I have a 2-line multi-time frame MACD down here, and then I also have the Squeeze Pro, and I have my VWAP. Here is my daily 5, my daily 8, some of David Starr's voodoo lines, and I have VWAP and the 30-minute 21 EMA right here. All right, so I just wanted to make sure you know I'm talking what you're looking at. Oh, and here is the daily market profile, and here is the weekly market profile. So at the moment, what can we do here? So yesterday, actually, the point of control was down here, but after yesterday's consolidation, point of control is up here. These white lines that are right here, these are the daily lines. So these 2 lines right here that I have drawn, it's these 2 lines. All right, and I'll show you why it's important that I'm pointing that out. So if we do, remember I said if we break the low of this line, which is yesterday's little spinning top doji type candle, that would put us below the weekly's point of control. And you can see that the path of resistance would be to the downside just for the day, right? Here's the daily 5 and the daily 8. I would anticipate breaking through the daily 5, maybe come down to the daily 8. And if we do, we'll come down to this little HVA right here, if the downside play does happen. And I think the move, if we do go down, the move is going to happen fast. Why is it going to happen fast? Is because this little gap in volume right here. So right here, there was almost no transactions here. It might stall right here simply because it's a little bitty node, and then it does look like I do a quick and fast move down here. Now what happens after that quick and fast move, we'll just have to wait and see. But that is what it's looking like from big picture, right? So that's why I'm saying if we break this low, look for the move back down to here quickly. Watch out for that 8 EMA. And so that's big picture. Over here on the daily time frame, we do have the daily point of control where we're currently at, but it's only the day, right? The most of the volume for the day hasn't even came in yet. That's just something worth noting that it's at the high. What exactly does that mean? If we start to pull back and we don't get above it, that would mean most of the volume has occurred above, and that means that we are going to pull back. And then if we do, say we come to VWAP, which is this pinkish line, say it holds, and you come back up to here, watch for it to stall about this level. And if it breaks above, then you keep on holding. But say it does break below VWAP, like breaks and hits here. All right, cool. Then watch for it to potentially start to move lower. All right, so now that I painted big picture, right, I want to do a quick recap. And if you have to, you can replay it because I feel like I threw a lot of information out there. So just a quick recap. Yesterday's candle could be a reversal candle depending how today's candle closes. As long as we stay above yesterday's high, I think the bullish scenario for the day trade today should be honored. If we start to break below yesterday's low, then we should look for the bearish play for the day, right? So that paints that picture. Come over here. These line out the point of controls for the week. I give you a reason to believe if we start to break below, look for that fast move lower down based off of yesterday's candle formation and the market profile and the why we should potentially get a fast move on the weekly time frame based off of this volume profile. And then for the day, we see most of the volumes occurring at the high. And if we just stop right here and don't go any higher, keep an eye out for the bearish scenario. All right, so now I painted all that. What exactly is my plan and how am I going to play it? So if, say, the market was to open right now, right here, if we pull back down here to VWAP in the 30-minute 21 EMA, I'm just going to draw the line right here. There's that. And that cool. Here's like the VWAP. We'll just say it's like there. And if price does pull back to here, and I start to see it's holding and I see my trend rotation start to rotate, then I will go ahead and play the bullish scenario and keep an eye out for this point of control for price to stop. That's the bullish scenario. Bearish scenario, say, okay, we're already breaking down like right now, right? Point of control held as resistance. We're starting to pull back. Let's just say we go all the way down and it breaks below VWAP. I like to be on the side of VWAP. Say it breaks below VWAP, and it probably won't be that drastic. Then it rallies up. And we'll just say, if we're going to keep this scenario here, just say VWAP's right there. I like to wait for that retest, and then I'll short it back down, looking for the potential down move. Now, when things potentially could get really crazy is if it starts to break below 54, which is all the way down here, right? But we have a lot of support and resistance along the way. So that's kind of like my plan right there. Just for a quick recap, there you go. That's what it looks like. Pull back to 30-minute 21 EMA and VWAP. Look for the spike. Oh, it's already spiking now, so there we go. And then, so it takes the bear scenario out of the question there, I guess. The Canadian unemployment rate will move the market. Well, there we go. I honestly was not too sure if that would, but here we go. All right, so we're spiking up, so that changes things. If it holds, to be quite honest, really just wait for your pullback and then go long. I mean, it doesn't get any clearer than that, right? We're above this volume. We're above this volume. We're up at the hourly third ATR, so that's something worth watching, right? Which is this. So basically, just wait for your pullback to the 30-minute 21 MA and then look to go long. But like I said, if for whatever reason, say whatever, I don't know, anything could happen. But say the market does pull down and then we break and retest, and just go short. That's pretty much the play. But I will say it's looking bullish. But that is my plan of attack for the day. If I do place a trade, I will send it out to all of you awesome members at the small account mentorship at Simpler Trading. And other than that, I hope everyone has a wonderful Friday and finish the week strong. And then I'll see y'all again on Monday with the next one. Have a good Friday. Enjoy your weekend. And I'll talk to y'all later. Take care.